Good evening. This is Ken Long at Tortoise Capital with the daily debriefing for January 9th, 2018. For our advanced swing course, there's still time to join if you are interested. I'm expecting it to go at least through the middle of March. That's the current plan. So the first thing I want to take a look at is some intraday turbo and core. We have XIV in this case, which has been long and strong, has been a brilliant swing trade. Just as a point of reference, this is what that looks like on daily, and you can see the tremendous payoff. That's on dailies. And so as part of that, what we had today was a gap up, and then a sharp sell-off. There was some tactical trading available inside here. I cashed the swing position in here and got basically flat in XIV. I just felt like it had been so good for so long that a pullback was inevitable, and so in fact that looked like this move here, and I wanted to just cash this big long swing. The signal lines have been well outside the Bollinger Band. It had been starting to slow down a little bit here during this big run-up. You notice the signal line was outside of the Z2. It crossed over, and this has been a grind, and this looks like the first big sell. Now, I'm going to be prepared for another resumption of this, like we see here, but this seemed like a reasonable place to capture a nice swing move that occurred from down in here, from like 110. So that's a 40% gain inside this swing. So the intraday move looks something like this. Selling that I noticed Warsaw. I missed this one. I was in a classroom teaching. I should have been available if I had been available here when this crosses the zero line. This is a big time signal to go short. This is bread and butter on the short side for me because we have big sell-off recovery, rejected at the edge of the 270 and starting to collapse again. You can get short as early as this move when it re-enters the Z2 or the Z1 or crosses the zero line. So you're getting a number of signals inside here, but the final confirmation is right here. And then I noticed a swing low, a higher low, and crossing the 270. This one fell short of the 270. This one reached the 270. This one breached the 270. I noticed this third leg here. Now, this would be a reasonable entry here, and this one might have caused you to scratch this big sell. But when it held support at the 270, third time's a charm. We have a crossover to the upside here, so we get the first entry at about 143.80. Held at the at support here, like this low and the next higher low. And when I'm holding this position with my initial risk of about 30 cents, I see this yellow line as a real confirmation that this move is in play. And then the daily target I'm looking for is just to return to this congestion level. And if it gets above 145.30 is where I would re-enter. It got through this, breached this line here. So here's your rising lows. This is the support levels or the resistance levels that had resisted before, then breakthrough, pullback, and resumption. So this is a second position at 144.69, and I'm looking at for about a 60-cent move on 30-cent risk, and there's my 2-to-1 to retest up to 145. The follow through the rest of the day. There was it got to 145, never got through 145. 30 for the third position. And I took this exit here when it crosses the zero line. Shh. Silly. We get a lunchtime Z3P, a collapsing dragon, and then a short from 144.50 to 143.50. Would you hush, baby? And so that's some tactical trading in XIV. This is earning money to fund the next swing position when it comes around. This is after hours trading. So that's XIV. What I want to emphasize again is that these MACD histograms and the Bollinger Band frameworks, collapsing dragons, regression lines are all fractal in nature, and so the techniques for determining bias and whatnot are all identical. Which is the decisions happen more quickly, and the moves are sharper in shorter periods of time on the tactical trading. So the next one, we're going to take a look at shifting to the swing, and we talked about this one yesterday. This was X U.S. Steel. And so yesterday, after this move, what I said was it moved the stop up to the 2-day low, and that I would be prepared for pullbacks. My actual, my aggressive stance today, and it was triggered by weakness in the indexes and in the volatility, and then I looked at these long, strong moves well above the zero line, running along outside the Bollinger Band, running along the 2Z score down in here, and so I accelerated this stop from 37.35 up here to 39, and basically captured an additional $1.80 of gains, and felt like I'd captured the significant move that was triggered by this entry here. We talked about that also for Brazil, which we'll look at in a second. So this was the swing trade frame that we looked at yesterday, the update on U.S. Steel, the initial entry, the second entry, and then we had tightened the stop up to the second, to the 2-day low, and then had this little sell-off. So we were going to be happy with an exit 37.35, but as we zoom that in, essentially we're move that stop up into here to get out at 39. And for me, that's psychologically important, because this long move that you see here, to be able to capture that additional piece feels good. And I'm prepared to re-enter should it take out yesterday's high and continue. I'm ready to get right back in, but I feel like I've saved this much, and rather than having angst about what to do tomorrow, it wouldn't surprise me to see some end-of-day traders wanting to lock this in and who couldn't get out intraday. And so we might see a gap down here around, let's say, 37.5, and then a resumption of the trend. That would be least surprising. So I feel like if I could exit at 39 and then re-enter this down around 38, I would have saved 2.5%, and then be able to rebuy the initial position back. Now on this one, I would not go back in at a double scoop, although I probably could with markets money. But I like to rebuild my positions one at a time. Especially after a selling event, which starts to negate this power. So if you didn't exit there, then my judgment would be to raise this up to 38 and try to preserve as much of this as possible. We will see a similar play in EWZ, so let me shift to that one right away. The same structure, only on this one, as you can see, we had already had 1 day of selling, and I talked about running this up into here, and so 42.50 was our exit rather than 42, and you can see that it closed weekly. And this is on just that one entry. So I like that one. And on ILF, again, the exit was up in here at about 35.80 and preserves this. Now on both of those, Latin America and Brazil, being broad indexes and being well above their fair value, I'm ready to go after weakness and play that short back to 35.22. That would be the least surprising move of all. And then if it went below this swing low and then started to close that gap, I'd be looking to add a second position short around 34.75. All of that tactical trading to take advantage of the money that has come into this from this direction. Now you'll notice here that the MACD histogram line hasn't even crossed over the signal line yet, and we're well outside the 2 sigma. And so this is pure money management and tactical trading and pattern reading, and that's some discretion for the agile trader, and that's part of core and turbo. Now, I talked at length yesterday about the Boeing trade, which has been, along with Caterpillar, has been one of the dynamic duo in the Dow. And I was lamenting how much of this I had missed, and I missed that one. And so I was prepared for Boeing today actually to go short, but what we noticed was using a hybrid frog, opened at the low of the day and then just took straight off. And this was a hybrid frog entry. So this was using a swing trade structure to frame a turbo trade without even a core position on. And so what I want you to notice is the move in Boeing allowed a early entry with a hybrid frog here at around 311, some tactical trading, and when it broke out above this line here with a low, a higher low, a higher low, and then a 1, 2, 3 entry when it crosses the 0 line here with an entry at like 314. There's a move up to 319 in a really orderly fashion, which then allowed an exit when you see it cross. Look how nicely that captures the move to the upside. This is an example of swing trade frame of reference supporting some intraday. Now I feel like I have some money earned from Boeing to start thinking about longer term positions for swings, and I don't feel as sad about missing that long move on the upside. All right, so let me get back to our primary briefing here. So what I want to summarize is, you've seen a lot of this. I want to put some rules together for some folks in the chat room. And the first thing is, if the MACD line is greater than the 0 line, so that's the blue line, is greater than the 0 line, then we should have a long side bias. And in this case, there was a hybrid frog entry to the long side available. And then if that MACD line crosses the 0 line, then we should have a short bias. And so in this case, when that crosses here, right in this big bar, you get a short side bias, which really pays off. Now, when can you shift your bias, or when can you start taking action? If the MACD line crosses 0, you can enter in the direction of the new bias using an obvious tight stop. So in this case, when it crosses that 0 line, I can be short when it breaks below this support level, and I just simply be using a 50-cent stop, which would take me above the most recent swing high of the RL10. That's what I like to use as the real price humps, is the RL10. That's the trader's price. Or you could use half of a frog box. You'll notice that there's probably an owl pattern in here. If we use the full RLCO Bollinger Band, there will be an owl position here. The 30 would have rolled over by this time. And we would be alert for a P1 failure or a collapsing dragon. And that is exactly what we have here, is a collapsing dragon shortfall as it's blasting through. Then on the upside, what we would pick up a long bias right here, so somewhere in the middle of this move. Now that one didn't follow through, and this really looks like a P1 failure at some point when it rejects the 270. Now it's a success because it got back to the Bollinger Band mean and went all the way up to Z2. However, what I like to look is the long-term fair value. So when you get rejections, as I talked about earlier, this was certainly tradable. And then the rejection of the 270. Now crossing the 270, this is where you get this, you get the next cross above the zero line, so you could pick up a long bias here. You picked up a long bias inside here. It was rejected pretty quickly, so if you had taken that one, when you see that it can't even make a new high and is being rejected, this should be a scratch trade, and you could even stop and reverse here, and you probably get paid a little bit inside here. And then you pick up the long side bias once more, and that does you no harm. You can either use the swing low or the swing low as your initial execution risk, and there you go. After the three rising highs, as I talked about earlier in this, and finding support at the 270, this is that cross to the upside. That's a nice entry with a swing low or a swing low as your stop, and then can reinforce success on the second or third leg up. So MACD histogram, when the MACD line crosses the signal outside Bollinger Band 1, you should be thinking about preserving profits, and this could even be a speculative reversal entry. And so here's the case I want to talk about here. This is outside Z2, this the yellow line, and certainly well outside Z1. And so on this move here, what that's saying is that crossover outside of that red river, if you were short in here, this is where you can, you should be thinking about preserving the gains from that short, and think about the earliest speculative re-entry. That's going to probably be an owl. Let's see if there's another one here. All right, here's another one. So if you had been short on this leg with your downward bias, by the time you get this crossover outside the river, you could be thinking about locking it in and the speculative move. And here you go from Z2 to Z2, and you can make a living as a day trader inside that space. This one is a tight squeeze on the Z scores. So the later in the day, the less powerful that those moves become or pronounced as the volatility compresses. But that's when I'm thinking about MACD histogram, or the MACD line crossing the signal line outside the Bollinger Band. I should have been in that direction because of the bias, and that's where I'm thinking profits were the beginning of a speculative reversal entry, like with an owl. Now, if you get a MACD line crossing the signal outside Bollinger Band 1, and then it rejects that crossover and then recrosses in the direction of the primary bias, then you can either re-enter as a pocket trade, or you can add a position because it's giving you that second leg. Let me see if we can find one in here. Let's go right in here. So we had it cross the zero line, so we have that long bias, we get long. It crosses back over itself, but then before going below the zero line, it recrosses. I was justified in getting a second position here, but from a money management perspective and respecting this resistance, I wanted to see it get through, find support, and then resume once more before I took a second position, so I wouldn't have too much risk. But in general, this is what we think about in the RLCO framework as a pocket trade. You had a successful owl, and then you're buying the pocket. You can see a pocket here. On this one, there's an owl, there's a pocket, there's a pocket, there's an owl, a pocket, a pocket. So that's the recrossing in the direction of the primary bias. Now, if you do not take profits at that first time when the MACD histogram, or the MACD signal, when the MACD line crosses the signal line is the 5-period exponential moving average, your not later than exit point is when it passes through the MACD Bollinger Band. So let's see if we can find one here. On this one, let's say we had taken the speculative entry in here, and we had this nice move, and now it's starting to fail. By the time you could certainly buy this re-entry of the river right here. Or that's when you could cash that one. But you could cash it when it crosses the zero line. You're justified in taking the short, but not later than exiting that river. So not later than here, and that would have protected you against all of that. Finally, the MACD line crossing the signal outside the B2 down here, and that's this one, and this was close. Both of these are special conditions and signal that there was a great directional move already, and that the symbol is in play for the day, and that you can stay with it. The herd is running. There's a lot of trading activity, and I say the herd is running today. But these patterns also work on all the swing trades. Like I said, they're fractal. You wouldn't even know what the time frame of the candles were unless you had seen the time dimension or the 1 minute. But when we look at swing trades, it's the same. Now, I've added this screenshot here for you, so you're not. If you wanted to print this out, make flashcards, you can do that without that chart. So let's take a look at the daily report now. Do a quick scan. Okay, so this is for the night of the 9th. Get ready to trade on the 10th. Still normal. Overbought, still overbought. The 200, the stretch to the 200 and the slope of the 50 both got stronger today. Risk index is still pointing up, favoring long side swings. There was not enough pullbacks in the indexes for overreaction or channeling. Very few pattern trades. Only a handful of the auto framers. Procter & Gamble, Johnson & Johnson. Very few mechanical swing signals. Intel and Verizon both big losers, 1 in 10 day, and a single-digit RSI 2s. So those are both worth looking at, Intel and Verizon. You can see Intel on 1 minute was definitely in play today, and there was a strong directional move and no buying pressure overnight. And so when we go up and look at the daily, that's certainly in play. There was a big sell-off, then a 1-2. Didn't get a 1-2-3 entry yet, and this rejection we were justified in getting short here. I will take additional weakness to be a sign of getting short with the initial target of 42, and then closing the gap down here to 41, and then final support at the RL10 at 39.5. So big time weakness. Noticing the big directional candles, these are signals for trending moves intraday, and you see that Intel is in that kind of mode right now with large real bodies in both directions. So prime time trading candidate. And Verizon was the next one. Oh yeah, even better. So here we have, in fact, if you had been in on this one, what a perfect example of that MACD histogram. So you get that Z2 crossover. So you picked up the short buy. I mean, this briefs itself. This is the whole workshop right here, guys. Crosses the zero line, so you have a short bias here from 49 to 44. 10% move. An orderly, 1, 2, 3 order. There's so many opportunities that I miss. Makes me sick. When this crossover occurs, it gives you a 1, 2, 3 entry at 45, up to 52 for crying out loud. This one never even crossed over itself, so this was still noise. Now this one would get me out, and then this one would get me back in on a universal entry in time to get this. This one would get me out. That would get me back in. This would probably get me out, and that'd be the third leg, diminishing returns. Then we have a Z3P setting up, and now we're getting some failure. And right now, this I consider to be a collapsing dragon. Now, if you were long from anywhere in here, this is sort of the not later than exit point, because now you had the crossover, and now the MACD histogram line is coming all the way back through the river. And so this is sort of the point of last resort for locking your stuff in, because you're going to pick up a short side bias here pretty shortly when it crosses this zero line. One more day of selling, and you get that. And this is a collapsing dragon on the 10. and then your target is 48. Beautiful. You don't need much more than that. So that's Verizon and Intel. See, all you got to do is look at the extremes. Caterpillar, IBM. Let's take a look at those guys. Caterpillar resumed the upward move today. The second position is locked in. I would move, because that's a doji, I would move that up into here. Now my second entry is in the money. Let me slide this over a little bit so it's clean. Caterpillar, and then Verizon. What's the other one? No, IBM, I'm sorry. Missed it. I should have, I was supposed to have been in on this one when it breached C2. I didn't have the order in, so I missed that move. This, you can see the diminishing range in weakness in here. I'm not going to get long that one. In fact, I would consider being short there with the stop here. If we saw weakness in the broader market and technology. My preference is not to go short these relative strength leaders. I'd rather find something that was weaker and pile on that to the downside. But in terms of trade framing, that's essentially how I do it. So if this gets rejected here, that resistance level, and falls back through here, then I feel like a target back to we'll call this 155 is the next play in IBM. Moving along, so the daily pinch and stretch. See all the usual suspects. I'm not going to frame these out for you. I've shown you how to do that already. Apple and McDonald's. Let's take a look at the Z3Ps at least and see what those look like. Let's see, Apple. Failure to follow through, a second day of doji, a little deeper test. The river rolling over. This is looking like a solid resistance level, and because this is lower than that one, this looks to me like some downside weakness, and I think the next play is down to 170, so weakness through here, and so we're getting this Z3 pinch, and all the regression lines are tightly in here, so I'm taking that to be a channel, and if I want to play the channel trade, I can go from here. I can get short here, and I'm playing for. I would look to cash that on the hesitation at 169. But then certainly, if it collapses below 168, say 40, then I definitely want to be short. And then all it's holding it up is these two bursts, and then it gets down to this level around 157 pretty quickly. So that was Apple, and then McDonald's is the other Z3 super pinch. Beauty, super pinch. Let's try to look at this on a super pinch chart. Sorry about that. Yep. So you can see this has had an enormous run all year, and everything pinching together. The 10, the 30, the 90, and the 270 all tightly pinched. So the breakdown on this one is the belly of the dragon. So short not later than 172. I think you could get short on a violation of yesterday's low, but not later than 172. So that would be an 80-cent difference if you wanted to front run that. And then if that breaks, the next support level I see is down here to the Z3 line, about 168. So that's the Z3 pinch breakout. This is what Apple looked like on that pinch. Scale this up a little bit for us. You could play it breakout at 178.50 to the upside. I would play it above the baby dragon or the hump of the dragon 175 to get long. You could play the breakdown here at 170, formerly 166 would be the Z3 breakout. But my belief is that if it broke below 170, you could get short. Okay. Let's take a look, see if there's any other pinch and stretches of note. Other than that, it's all the usual suspects. You can see the ones that are approaching Z3 super pinches inside here. 3M, Johnson & Johnson, Procter & Gamble. A lot of those basic materials and healthcare stuff. Pfizer, getting ready for breakdowns or breakouts to the upside. Let's see what that looks like. Because I have some interest in the healthcare sector. So let's take a look at Merck. Yep. Sell off and now healthy recovery with a slight upside bias. Pfizer, even tighter pinch, and I like that the move is up, so this is even stronger than Merck. I would buy a breakout here of 36.95 to the upside and trust that we're going to get this move up to here. And then Johnson & Johnson has already started. Big spike and then a pullback. If it holds above, say, 142.60, then I'm going to buy resumption. So that's going to be a move. The next move is going to sort of look like this. The last Z3 pinch broke out big to the upside as part of recovery in healthcare, which is XLV. Yeah, the healthcare is already happening, guys. Get on it. All right, that's everything I want to cover. This is Ken Long at Tortoise Capital in the Advanced Swing Trade course. Keep your risk measured and your powder dry. Healthcare.